All right, welcome to The Explainer. Today, we're going to demystify the U.S. tax system for foreign nationals. And to do that, we're not messing around. We are going straight to the source and using the IRS's own rulebook as our guide. So let's dive right in. Look, for any foreign national who has money or income connected to the U.S., the single most important question you can ask has nothing to do with your passport or your visa. It all comes down to how the IRS decides to classify you.
And this is the concept you've absolutely got to get your head around. The rules for immigration and the rules for taxes, they are two completely different worlds running on separate tracks. Once you really grasp that, everything else starts to click into place.
Okay, so here's our game plan. We're going to approach this like a funnel, starting with that one big fundamental question. Then we'll trace its consequences all the way down, from what kind of income gets taxed to the exact forms you'll run into. So let's get to it. The entire system, everything we're about to talk about, hinges on this single binary choice. For tax purposes, are you a resident alien or are you a non-resident alien? That's it. That's the question. So how in the world does the IRS actually make that call? Well, the good news is it's not based on feelings or opinions. It's a very clear-cut process based on two specific, almost mechanical tests. Basically, there are two main roads that lead to becoming a U.S. tax resident. Path number one is super simple. It's the green card test. If you had a green card at any point during the year, boom, you're a tax resident. Path number two has nothing to do with your legal status. It's all about how much time you physically spend in the country. And that second path is called the substantial presence test. It's basically a math problem. The IRS just counts your days. If you are in the US for at least 31 days this year, and if you hit a special 183-day total calculated over the last 3 years, you meet the test. It's a purely mathematical trigger, which is why keeping track of your days in the US is so critical. But wait, there's an important escape hatch. Even if you trip that mathematical wire, you might still avoid being a tax resident. It's called the closer connection exception. If you are in the US for less than half the year, you can argue that your tax home, basically your life's center of gravity, is still firmly planted in another country. Okay, so who cares? Why does this one classification matter so much? Because, my friends, it determines the entire scope of the IRS's power over your financial life. And here it is, the core difference. If you're a resident alien for tax purposes, you're treated just like a US citizen, meaning you're taxed on your income from all over the globe, your worldwide income. But if you're a non-resident alien, the IRS generally only cares about the money you make from US sources. The difference is absolutely massive.
And hey, don't just take my word for it. This is straight from the IRS. It highlights just how critical timing is. What matters is your status at the moment you earned the money. This is huge for anyone who changes their status partway through the year, what's known as a dual status tax year.
So, as you can probably guess, this huge difference in what gets taxed creates a ripple effect. It completely changes the actual practical mechanics of how you file your tax return, the forms you use, the rules you follow, and the benefits you can claim. You can see the split pretty clearly right here. Resident aliens use the same Form 1040 as US citizens, but non-resident aliens, they have to use a totally different form, the 1040 NR, and that NR comes with a whole host of restrictions. And this is where the rubber really meets the road. Being a non-resident alien filer means you generally can't file jointly with your spouse. You can't take the standard deduction, and a lot of the most common tax credits are just off limits. These aren't small details. They can make a huge difference in how much tax you owe. All right, for our last section, let's zoom out. We're going to look at the bigger picture, how the IRS enforces all this, and what key tools and relief options you need to know about. You have to understand that the whole system is built on a withhold first, ask questions later principle. The IRS requires anyone paying you from the US, like a bank or a company, to act as a withholding agent. Their default instruction? Hold back a flat 30% of that payment and send it directly to the IRS, unless you prove you deserve a lower rate.
And this shows you how that works. The burden of proof is on you. The main tool you use is Form W-8BEN. And here's a key point. You give this form to the payer of the income, not to the IRS. Its job is to stop that automatic 30% withholding before it even happens.
Now, tax treaties are a huge exception to all these standard rules. They are powerful overrides. If your country of residence has a treaty with the US, you might qualify for a much lower tax rate, sometimes even zero. But, and this is crucial, it's not automatic. You have to actively claim that treaty benefit.
This brings us to a really critical piece of the puzzle, the ITIN. It's so important to understand what this is and what it is not. An ITIN is not a work permit. It does not give you any immigration status. Its one and only job is to be a tax processing number for people who need to file taxes but can't get a social security number.
And as you can see, it's not just for people filing their own returns. If you're a non-resident claiming a treaty benefit, or if you're a dependent being claimed on someone else's return, you're probably going to need an ITIN. It's the key that unlocks your ability to interact with the US tax system.
So, let's bring it all home.
When you strip away all the forms and all the rules, you see that this entire complex system is built on one simple, incredibly powerful foundation: your tax residency status.
At the end of the day, this isn't just theory. This framework has a direct impact on your wallet. It decides what you pay tax on and what breaks you can get. That's why figuring out your status isn't just a technicality. It is the most important financial question you can answer.